Brilliant. Well, guys, everyone, welcome. First of all, Adam, thank you so much for joining us, and thank you for your time. We're delighted to have you. Adam is
My pleasure.
a VC, venture capitalist, Collider, doing great things, investing in blockchain. A good friend of ours, particularly Damez, and he's going to talk to you today about, answer questions about startups, investing. How you can ask him anything you want to. No question is too simple. Adam started. He built and sold Binpress, which we're definitely going to ask questions about. So he's not only been an investor but a founder as well, before being a venture partner at 500 startups, and then in January 2019 founded Collider. And I'm sure it's been a fantastic journey so far. Only better when the market is a little bit like it is right now. Adam, thank you very much and welcome. If I may start, so young Adam, aged 18, 20, did he think he was going to be a founder and eventually an investor?
Hell no. No, not at all. I mean, I've been in front of a computer since the age of 8, and I think I was an entrepreneur probably since the same age, doing all kind of stuff that kids would do, like, selling homework, selling disc and stuff like that, trying to earn my wage to buy a sandwich or whatever when I was a kid. But I never thought I would be, in startup. I think that I actually started around 22. So that in Israel, basically you have a mandatory army service. So basically from the age of 18 to 21, you do nothing. You just, you get drafted, and then I was a paratrooper. Actually, during my service, I had a few unit, I would say computer unit asking me if I want to join, but I kind of wanted to do something a little bit more physical. And then when I left, I started doing all kind of projects when I was in university, and then at some point I started building random projects for all kind of businesses. And those projects were, I think back then there was no cell phone, so they just launched, and there was no concept of SaaS. And I started building those projects that would be basically kind of management software for a school, management software for a company, all kind of management software. And at some point, I remember at 2 a.m. I was sitting with my roommate who was also building with me those projects, and I told him I have an idea. And that was probably the pivotal moment in my life where basically I became an entrepreneur without knowing I was going to become an entrepreneur. And the idea was to basically launch something like Salesforce for micro businesses. So basically 5 people and down.
Awesome. So how did this eventually become Lionite, which was your first kind of venture?
Yeah. So my first company was called Octobox.
Okay.
And we basically scrapped this from our history. I mean, probably on my LinkedIn or somewhere, but basically it was like this complete failure of everything possible. We've been, we have been in beta for like a year and a half. We've been moonlighting and doing this project while we were working in other things. So I was actually managing a restaurant, and we were doing a lot of different mistakes. We tried to raise money from investor, and we didn't, really raise well. I mean, we didn't create any momentum with investor. We didn't have a good deck. So we did like multiple and idiotic, mistakes. And then at some point we decided to fold the company. And then we had basically 2 things going forward. We basically said, okay, we need to leave our job and we need to go all in. So basically we need to burn any bridge and not look back. And then second was that basically we would be starting Lionite, which basically started as an incubator. And the idea behind that is that we wanted to work with as many founders as possible. And, we knew that we were good at building software. We knew we were good at, designing and doing product management and everything. So we were a team building software product, but we were really, really lousy at executing and being, in marketing and sales and everything else. So we needed to kind of learn those skills. And the idea was basically to partner with entrepreneur for about a quarter, like 4 or 5 months, launch their product, charge as little as possible, but take some ownership in every project. And we thought we would be doing that for a year and a half, and then go back and then launch our own company. We became so successful that we did it for about 4 years. I mean, I would say successful in a sense that we had about 2 exits or maybe 3 exits in our portfolio out of 10, 12 company that we built. One sold to Iron Source for 28 million. Another one went to raise money from Sequoia, Intel, and a bunch of other investors. And we basically sold our share, I think, in Series A or Series B at some point. And then we had a couple of other smaller exits that didn't really, return the money we invested, which was sweat equity, but was not like a huge exit or whatever. But the biggest, I think, success was that we actually learned a lot.
Yeah.
And that was kind of the trigger for the next startup, Binpress. And we really enjoyed, and everyone in Israel wanted to work with us. I mean, we kind of became investor in a sense that we would be interviewing, software product CEO and founder, and kind of pick the one we wanted to really work with. So that was a really nice place to be.
Awesome. So you were doing basically investor work at that time. How does Binpress come about? Like, you must have been thinking, right, we're gonna have our own fund, we're great at this, but you start doing a startup. How did that happen?
So here's the thing: we never knew that we were actually doing investing, right? So we were actually building software for other. We actually coined the term incubator like a year after we closed Lion. And we were like, oh, wait a second, we actually incubated project. We're an incubator. So the idea came from a necessity. So we understood from building, 12 projects for other founders that we really needed to have strong product market fit. And strong product market fit usually come from demand, from people you talk to. So doing a lot of research and talking to a lot of, founder, etc. And what we found out is that basically we had a really big problem. And the big problem was that we built, 12 products. During the 4 years, we built a framework of a lot of classes and tools that we reused from one project to another. We used a lot of open source projects as well. And every time that we were using an open source project, we kind of hit a wall where we had a problem and we needed to fix it. Now the TCO, the total cost of ownership of using open source, is actually pretty high. People don't understand that, but when you use an open source project and you have a problem and you fix it, it usually takes much more, much longer than it would take the person who actually wrote the code. And sometimes you have like 20 or 30 different people fixing the same problem, the same issue, and they don't share it back with the open source project, whatever. I do remember one single moment that basically we had a problem. We were about to launch a product, and we kind of tried to get to the bottom of a certain bug, and we couldn't for some reason. And then at some point, I sent an email to the person who actually published the open source project, asking him, "Hey, could you help us?" And he never responded. And then at some point, I said, "You know what? I'll pay you." I don't remember if it was a couple of hundred. It was probably $500 or whatever for like 10 minutes work. And we said, "We'll pay you $500 for that if you can send us the fix." And it was like, "Yeah, that's a problem, whatever." I mean, he kind of replied like instantly. And then we sat there. We understood that basically people were not incentivized to actually help us because there was no financial component to that. And then we asked ourselves, what if we could add a financial component to the open source world? What if you could turn the open source software landscape to a commercial open source software landscape? And that's when basically we decided that we wanted to build a marketplace for commercial open source. So basically, connecting people like us, incubator, software developer, with other people on the other side that would actually give services and fix a problem for a fee.
Awesome. And so fast forward, we are fasting a lot. You're eventually bought out by Coders Clan. What was that process like? So did you feel vindicated by the end? Were you kind of just exhausted by the end? We're fast forwarding a lot here, but that's 6 years of building a successful company, and you've sold your baby. Were you happy at this point or just relieved?
So there's a backstory that I don't think I ever told publicly. So it's it's a scoop here.
Exclusive.
I've talked, yeah, it's an exclusive. I've talked about it with a lot of people. When people ask me, if I made a lot of money or whatever, in Israel, people ask you those kind of questions. They're not very polite. I usually say that I was able to return money to my investor, and at the end of the day, it was not a great financial outcome for me, but it was an amazing success because I learned so much. And one of the things that I learned is basically selling a company, which is a process of its own. The thing is that, and I try to be super transparent because I believe that radical transparency kind of set the right expectation. Building a company is super hard, and most of the time you actually close it and you don't sell it. We were in an acquisition process before we actually sold to Kodos Clan, and we were going to sell the same company with the same asset and everything for a couple, probably dozens of $1 billion. And we were in the process. We started really getting into the process. Like along the way, we met with the team. We met with they flew to Israel to meet with us and everything. And at some point, they basically went radio silent. And it sounds like crazy, but it actually happened all the time. Only after a while, when I met a certain person, I understand that the person who actually was driving the project, these M&A, got fired by the company. I understood that they were basically doing another acquisition. They were being acquired by another company, and they were doing like a back-to-back acquisition. So basically, they were waiting for that acquisition of some of their asset to close in order to do our acquisition. And when that failed, they basically they were in shock themselves. And so at that point, you have to understand it's a process of at least 4 to 5 to 6 months. You go through a lot of crazy roller coaster because you basically know, oh, we're going to sell the company, we're going to work for that company. There's a lot of synergetic value between us and everything. And then in a single moment, everything kind of evaporates. During the 6 months, you don't work on the product, so you also lose some steam, and basically, it's a very tolling process. It takes a lot of energy from you and a lot of energy from the rest of the team. And then you ask yourself, what do I do now, right? One, the revenue went down, your burn rate is kind of dwindling, and so you ask yourself, do I go and raise a Series A, or do I go and try to sell the company? And kind of talk to a bunch of investors, and some of them told me, well, maybe just go and sell the company to, try to run another process, but a quick one. And if you don't end up selling the company, just close it. Even if there's revenue, whatever, the opportunity cost is kind of high. We did a pretty fast process, and we kind of pushed toward, selling the company rather quickly, knowing that we would not continue, as opposed to the first acquisition where we decided that we wanted to be part of the bigger company or whatever, but here we just wanted to sell the asset. So it's a difference from selling the company's the asset and the team, and there's a lot of synergy, and so a company is willing to pay a lot of money for that, as opposed to just selling the assets where basically you're selling revenue, users, and the brand. But going forward, in Insight, it was a great experience, although it was very draining.
Yeah. So what did you, as that was kind of coming to an end, obviously you kind of started to join 500 startups. Had you already kind of in your head gone, right, my next step is to be an investor, or were you still thinking could be a founder again? Like, what was
Okay. Yeah, that's a good question. So I knew 500 Startup from 2013 because I got accepted into the accelerator. So basically, Binpress went through the accelerator, and we were in batch 6, so one of the first batches. We were also the first Israeli company to get accepted at 500 Startup, and the actual funny story is that at the same time, YC, Paul Graham, and the other partner wanted to interview us as well, but we already accepted an offer for 500 Startup. And then I asked them, do you mind if we come and interview with you guys too, because we just want to get some feedback from you? And they said, no, you can't. They were like very blunt about, no, if you accepted an offer from 500 Startup, we don't want to talk to you. And that was completely fine. And then when I asked him, would you be open to accept us if we get accepted at 500 Startup? And they said, no, you can't do 2 universities at the same time. That was the way that they looked at it. in insight, that was a great decision because, the network, there's a lot of overlap in the network between Fabulous App and YC and Techstyle and Angelpad and a bunch of other accelerator. So I knew them for quite a while. And Dave McClure, who started Fabulous App, and I became friends. And then at some point, I kind of asked him, hey, we should bring Fabulous App to Israel because Israel is a great ecosystem. And I'm the first Israeli company. That doesn't make sense, because there's a lot of success coming out of Israel, but you guys have no foothold in the country. And I think back then they had funded like 500 startup. I was actually in the batch where we hit the 500 startup mark. Today they have more than 2,000 companies. Yeah, so they're very they've invested in a lot of company, but not a lot in Israel. And at some point, I think Dave just asked me if I wanted to become a venture partner, and I said no. I mean, twice, just because I thought that was, becoming an investor was kind of boring. What happened next is that Dave was actually very smart about it, and he said, you know what, Dave, don't become an investor. Go and scout for a company, and then whenever you see a good company, just let me know, and we'll write a deal memo, and then we'll fund them. And also I started, I think about 8 months or 9 months before I actually joined Fabulous App, I started meeting with, companies, and I was like, yeah, I'm a founder, I run Binpress, but at the same time, I'm kind of scouting for Fabulous App. And I kind of became addicted to meet other founders. I found myself, being pretty useful to them and giving them advice and operating the business and all that stuff. And then at some point, even writing a check, which is a great elating experience, being able to give money to another entrepreneur, especially when you went through fundraising. And then my daughter, we just had my first child, and we sold the business. And so basically, I was kind of out of breath, and I wanted to do something, a pivot in my life. And then I came back to Dave and asked him, hey, do you remember twice you asked me if I wanted to join Fabulous App? Is it still on the table? Because I think this might be the right time for me. And he said, hell yes. And yeah, I joined in September 2015.
Awesome. Well, you spent a number of years doing it. What?
Yeah.
I have to ask the next question. I'm conscious I want to get to the student questions, but I have to ask this one. So why you were doing traditional investing effectively? Why blockchain investing? Was there an overlap period, or did you were you involved in the space and you thought, actually, if I'm going to be an investor, let's go for this space that could really take off?
Yeah. So it's a good question, and one that there's also a good story behind that, and I don't want to take too much time because I probably talk too much. But basically, the thing is, I've been exposed to blockchain since 2011, when a friend of mine told me about Bitcoin, and so we started mining a little bit on my computer. I thought that was a nice experiment, but nothing more than that. And yeah, I at some point I also lost my wallet because I kind of gave away my computer, but again, it was not something that I really paid attention to. 2015, fast forward, the same person came to me and told me about Ethereum, and again, same. I didn't pay attention. I was very, very busy building my own company, and I thought I was going to be a billionaire from building a unicorn. But then when I joined Fabulous App, I think my whole perspective on the world kind of shifted. I started thinking on patterns, about patterns and about investment pattern, and I kind of wanted to build my own thesis. I wanted to be kind of I wanted to be like the special snowflake, like my mom used to tell me that I am. And I had developer tools and open source, and I asked myself, okay, what else can I do that is kind of overlapping with open source, the open source ethos? And I remember I read an article in 2016 about the DAO, the Decentralized Autonomous Organization, and it kind of blew my mind. And I was like, wait a second, a VC on blockchain, can that actually happen? I read it on TechCrunch, and I started talking to my peers, and they were like, yeah, no. They were like, nah, it doesn't happen. Usually when someone tell you there's no way something is going to happen, it might actually happen. And VC, it's a paradox, because VC are probably the one that, they invest a lot in disruption, but they don't like to get disrupted, and they don't believe they're going to get disrupted. So fast forward, I started reading a lot of white paper and got, into crypto. And what happened to me is that rationally, from a rational perspective, I thought that was a really neat idea of turning open source, basically taking open source and adding a business model that is rooted at the protocol layer and allowing people to pay for like bits and bits. But at the same time, also had an emotional reaction, the same reaction I had when I was in front of a computer and when I was 15 years old, and for the first time I kind of experienced BBS and IRC. Probably the students don't know what it is, but you guys can Google it. It's like it's the first time that I was able to connect with hundreds of students around the world. There was no Zoom, no Google, no Facebook, and then exchange information. You know, it's like I'm getting chill right now just talking about it. I mean, it was like it was amazing, and I was on the internet for a couple of years before that. Experiencing GeoCities and experiencing, you know, Alta Vista. I saw the birth of Google, etc. And the chill was actually when I was experiencing this exchange of information. So the same happened to me with crypto. It's kind of sealed the deal. I mean, at that exact moment, I told myself, okay, I want to spend my next 20 years because there's only like once in a lifetime or twice that you actually feel like that. And I really want to double down on an industry because I think there's going to be a future. And in the short story, I kind of came to Founders App. I asked them if they wanted to invest in the space. They said no because the LPA, their investor wouldn't allow them. So I started angel investing. That's how I got to know Demir, and we became friends. And then at some point, I decided that you know, I had enough angel investing, and then start my own fund in 2019.
Awesome. Well, let's go on to the student questions. Now that we've had the nice overview of your career so far. So for students, the way this works, a lot of you put questions on the Q&A already. I will read those out. If anyone wants to ask a question kind of directly, please raise your hand and we can let you speak. So the first question has actually been answered, which was how do you get into blockchain? How did you get into blockchain? So that was done. And the how did you start investing? So let's go on to the next one, which is what's the Israeli blockchain scene like at the moment?
Okay, I would say pretty dormant, and it's interesting. You know, I'll be frank with myself, and I'll say that 2017 was booming for the Israeli scene, but I think that a lot of you know, I wouldn't say bad actor, but a lot of people got really greedy very fast, and then you know, they participate in the ICO boom, and then at some point, basically, a lot of this company just kind of closed. There were a lot of companies who tried to do an ICO, but they didn't need a token. That was just a really fast way for them to raise money, and that happened, you know, everywhere in the world, not just in Israel. So everything kind of, you know, there were a lot of companies. There was a really big tech scene around blockchain and crypto, and then at some point, I think 90% of that evaporated. I'm pretty sure we are the only fund right now investing in Israel in blockchain and crypto. There are another fund that does some investment, but in liquid investment, and then a couple of hedge funds, and then maybe some VC would do some, you know, casual investment. So there's not a lot of blockchain and crypto in relation, I mean, you know, to the other high-tech scene was like booming crazy. But we're working very hard to rebuild that ecosystem. But there's still very good company. I mean, there's Fireblocks, there's Zengo, there's Fuse, there's also Banker. There's a bunch of company who went through the 2018 and 19. So we're hopeful that in the next few years we'll be able to rebuild the ecosystem, and there'll be more and more entrepreneurs here. But it's not what it used to be in 2017.
Awesome. Let's go to Nick, who's going to ask a question live. Damir, can you give Nick? I think you can talk now. Nick, can you talk? Your microphone's off.
Oh, can you hear me now?
Yeah, go for it. Nick is one of our
Cool.
serial hackers. Has been in all of our hackathons actually, and is at Peking University and used to be based in Oxford. So Nick, fire away.
Hey, Nick.
Hey, thank you for the Q&A. My question is, how are VCs and investors responding to the new internet era of things like DeFi and AI, like the new open AI sort of stuff that is essentially like digitalizing or digitizing high-level skills? Like recently I saw, you know, smart contracts are now able to start a LLC in Delaware completely without people. So, it seems like it's trying to replace high skills. So I was curious what your thought is on that.
So let me ask you a question. Do you, when you ask how VC are responding, do you ask about general VC or VC in the blockchain and crypto industry?
Kind of both. Like I think, yeah, kind of both, because a lot of it is mixed, I guess.
Yeah. So I think the VC by definition always look for disruption. So they do understand that a lot of these soft skills and those high skill will be replaced at some point by computer and by software. You look at Fiverr, which is an Israeli company, and they replace all those single tasks that you want to do, kind of mechanical work with some soft skills involved and high skills. So I think they all understand that at some point it's going to happen. I think that when it gets to how do we implement that and how does certain type of technology get used into that process, I think that's where we kind of deviate in how we think about it. I mean, regular VC will probably think the blockchain or maybe crypto will not be part of it because, obviously if they thought that crypto and blockchain was so important, they would be investing today. So there's a lot of skepticism, especially after 2017. They were like, I think a lot of them tried to invest in the space and then lost some credibility and money. But when it comes to myself, I have some sort of view on the world. I think that and when I use the word blockchain, I kind of use it interchangeably with other type of technology like DAG or whatever. I think that blockchain will eat the world in a way. I think that there's a lot of bureaucracy and automation will be replaced completely by those different systems that will be distributed and talking to each other and then also kind of moving assets and between those different chain. And there's no way that probably 50% or 60% of businesses, if it's setting up an LLC or selling your apartment or even running the stock market, whatever, should not be replaced by automatic, some sort of automation and blockchain. So for me is I actually think that blockchain and crypto will play a big part, but will be kind of transparent. So it's going to be in the back. It's like TCP/IP. We're not going to interact. We're not going to interact with it. And some other VC will probably think that other type of technology will be playing a part in the future. Does that answer your question?
Yeah, thank you. Really informative.
Awesome. Great question, Nick. Cool. Should we go on to the next written question? So it's, do you think token incentives can help fix how open source software is made?
Absolutely. I used to joke that when I started Binpress, which was in 2010, if we had Ethereum, we probably would have done a token. I will just tell a short story. But basically, at Binpress, I would spend 30% of my time trying to find error in my database where the money went. So we basically had to deal with PayPal and Stripe and a bunch of other payment systems. And someone in India couldn't receive money from PayPal, so we had to do another way. And then someone in Africa couldn't receive any money at all. And so we basically had a lot of problem with paying developers around the world. We had to spend a lot of time connecting to different payment systems, and those payment systems were atrocious because some of them froze our accounts at some point, like PayPal, for example. And then other were just taking like a huge fee, and we didn't even know if we actually were aggregating payments, and so we needed a license or something at some point. So we probably violated a few regulation and some law in some of those countries. And then just doing the accounting and everything. If we had a blockchain solution, if we had like some sort of chain, and we could kind of even disburse like stablecoin and allow people to just have USDC in their wallet, and then they could do whatever they wanted with a stablecoin. I guess I would be able to spend myself and the team would be able to spend like twice our time on other projects and kind of innovate. So absolutely, I think blockchain and crypto could play a really good part in any marketplace, by the way, not just open source.
Awesome. Let's go to the next question. Here's the obvious one. Not obvious. How early should one get funding?
It's a good question, actually, and not so obvious. I think that the earlier you get money, obviously the lower the valuation, and so you kind of there's like this optimization game where basically you need on one end you don't want to give away too much of your ownership, but at the same time you don't want to spend too much time trying raising money, so you really want to give like an obvious deal. My usually what I tell a founder is, you should be able to build a product. So you really want to have some sort of MVP and have some sort of early product market fit. I mean, it's really hard today to raise money on an idea, unless you have what we call FFF, friend, fool, and family, that would actually invest in you, and then usually you can do like 100K pre-seed round at a very low valuation, like $1 million, give away 10%, and then just build your product, and at some point be ready to raise money from angels and maybe seed fund. But yeah, I mean, if you have the ability to kind of bootstrap for a couple of months and then build something together, I think more than just optimizing for your valuation, what it does is to actually can prove yourself that you have something in your hand, because the most expensive asset is your time, nothing else. And you don't want to go and raise money on an idea that you have no idea if there's product market fit, and then spend a year and a half spending that money on something that actually don't work. So just getting quickly through some sort of iteration, getting some feedback, and then going to an investor and telling him, okay, this is the MVP, this is the early test that we've done with some of our customer, showing that you have an early idea of what product market fit would look like. I think as if you can get to that stage and raise money, that's probably the best.
Awesome. So this question I think is more linked to your Binpress days. Do you think that acquirers sometimes only pretend to have an interest in buying a company just to slow you down?
I don't know if it's to slow you down, but there's we kind of fielded like several times, like we probably had like 10 or 20 people during a few years that wanted to acquire us. You have to understand that usually a company, I mean, I'm generalizing here, but basically there's like probably two ways that you could get acquired. One is a product manager or someone from the product works with you, and then you're doing some sort of partnership, and then at some point there's convergence and they think there's synergy, and then they go to their CEO, someone who's in charge of M&A, and say, we should acquire those guys. They'll just significantly improve and accelerate our product roadmap. And that's the best type of acquisition because you already work together and everything. And then there's the M&A guys and the business guys who are kind of, you can think about them like a recruiter. Their business is just to go and fish for potential companies. They sit down with their product manager, they sit down with the CEO, they're trying to understand what's the product roadmap, and they're basically trying to understand where do they need to kind of acquire in order to kind of accelerate the product roadmap. And so they'll go and just talk to anyone. Now they'll give you the best, they'll tell you, oh, you're an amazing product. We want to talk to you. We may acquire you, and they'll just spend a lot of time with you, and then at some point they'll just vanish or whatever. And that's part of the business. I mean, they're not doing it to slow you down. They're just doing it because they run a full process and they need to talk to all the other products out there in order to find the right fit and the right team. That's completely fine. And you need to understand that as an entrepreneur.
Awesome. So Tiger asks, should I aim for revenue, users, or quality of product? I presume this is at the early stage. So revenue, users, or quality of product?
You should aim for product market fit, and product market fit kind of, I think, manifest in different, in different business in different way. And I would say, if revenue for example, if you're a marketplace, for example, or if you're a simple startup that just sells something, obviously revenue will be your proxy of understanding if you're doing well or not. And then the question is how many times those users are coming back, and understanding, some sort of key metrics of your user, the LTV, the lifetime value, and doing cohort analysis to understand if, your customer are coming back, and then how often, etc. And what's your CAC, which is the acquisition cost of your customers. So, and in B2C, which I'm less familiar with, obviously it's going to be about engagement. It's about DAO and daily active user and weekly active user, and the ratio between them, and then the engagement, etc. And then growing at all costs. So basically spending a lot of money just growing the user base, and then at some point maybe selling that company or doing money from other places. So it really depends what kind of business you're building. It really depends on what you're optimizing for. I think in the last couple of years, SaaS became increasingly competitive, and so I think from time to time, what we found out at 500 Startup is that we wanted like a higher recurring revenue, a monthly recurring revenue from this company. And so, at the beginning, if you could get away with 5K MRR, at some point you needed 30K MRR, and at some point 50K MRR. It really depends the sector that you're in. But at the end of the day, you need to really focus on your OMTM, which is the one metric that matters. And if you lift that OMTM, basically it's kind of lifting all the other metrics, and you're successful.
Awesome. Next question, obvious one. How do you pitch to VCs? So I guess there's two aspects to this. Is how do you actually reach out to VCs? And then when you're in front of VCs, what should you be saying?
Okay. VCs are human beings, and so they like to be pitched in different flavor. So it's really important to do some research before you reach out to them. So I used to remember the days where people were saying, you know what, if you want to reach out to me, you need to have a call. You need to have like a really good, like a warm recommendation, or someone introducing the two of us. And then you're on the map. And then at some point, some VC said, you know what, you just, even cold email is fine. But my recommendation is that if you can get an entrepreneur to introduce you to the VC, that's always good. Because entrepreneur will get money or funding from the VC is always trusted by that VC, because obviously they work together. And so if that entrepreneur is willing to recommend another entrepreneur to the VC, that's the best type of introduction. The second type of recommendation is usually when someone invested in you, an investor, and then they just introduce an investor, and that's a really good type of recommendation. Service provider like lawyers and accountant or investor will pass on you are not really great introduction, but they may sometimes really really do well. And then how do you pitch the investor? You need to do some research. I mean, you need to come up with something that can intrigue him. I mean, the whole fundraising process is all about getting to the next step. Don't come to him with like everything and then tell him everything that you have in your head, because you've been building your company for a year and you have a lot of context and a lot of history, and that person sometimes doesn't know anything about your business. And so you really need to start with the obvious, the team, the market, the opportunity, what's the pain. You need to show him that you're smarter than him. So basically, you know more than he does. And if an investor walk away from an investor meeting, feeling smarter, that's always a good sign. And again, there's a lot of VC out there blogging about the experience and writing, and you can find a lot of information about those VC. And so whenever you come and pitch, you can always craft your message to that certain partner, because they're human being and everyone like a different story.
Awesome.
But 1 second, sorry. The most important thing is that you need to tell a good story. I mean, storytelling is very important. At the end of the day, if you come and you tell a good story with all those elements that I've just mentioned, and that story is intriguing, and the investor will want to hear more, you're gonna get into a process, into a pipeline where the investor will be meeting with you again and again, and that's how you get the ball rolling. At least with me, that's how I like to do it.
Awesome. Do you think GPT-3 could replace VCs?
Okay, I have no idea. I mean, I could tell you yes, I could tell you no, but I haven't read enough. So I've heard some people say that this is almost impractical to run GPT today on the computer. Some other people say that this is not open source, and so people haven't really delved into the technology or whatever. I think that I mean, I've seen some blog posts that basically was a person claimed that he was writing that blog post based on GPT.
I think we've
that
seen
was kind of that was kind of impressive. So yeah, obviously in the future we'll have a lot of problem with AI. I mean, a lot of problem because deepfake is amazing. You could actually watch a movie or watch something like an infomercial, and you have no idea if what you're watching is true or if this is just fake. And we're gonna have to build like counter technology to kind of find out if this is, if what we're watching is true or not. I mean, there's a lot of fake news today. I believe that it's just going to intensify in the future with AI. But yeah, I mean, I have no idea if GPT will actually replace VC. I hope so. So I could actually retire and do other things.
I've pasted the link to that article if anyone wants to read it. I was quite annoyed because I said to my girlfriend yesterday, I was like, read this article, it's really cool. She's like, is this generated by an AI or something? I'm like, how did you get that so fast? Like, you asked the question like that. So I knew it was some trickery. Anyway, on to the next question. So should students get a job or do a startup, I presume on graduation?
That's a hard question because so basically I started a startup right out of the gate. So I started managing a restaurant. I was in the restaurant business for some time, but that was not really. I mean, it did teach me a lot about customer service and about things that I apply up until today. But in retrospect, when I look back, I would have wished to probably I probably would have wished to go and work for a startup for like a couple of years to kind of get a little bit more experience and specialize in something. Right now, I could say as a founder, I'm kind of I'm a generalist. I'm almost unemployable because I have like a lot of skills, but they're not super special. And as a CEO, and I would have wished to have a little bit more expertise on a certain subject at some point. So going back, I would have worked with a startup for a couple of years just to kind of understand what do I want to do, and also starting a startup is not for everyone. Just being part of a startup, but not having this emotional roller coaster, but being able to kind of look at that emotional roller coaster and being like employee number 2 or 3 or 4 is really helpful for you to kind of is what you want to do for your whole life. And just starting a startup right out of the gate, sometimes it's very hard and almost could be a failure. But if you're persistent and you will say, well, you know what, Adam, you're wrong, and you're starting a startup, then probably you're the right founder, because the right entrepreneur will never listen to other people. It will just go with whatever he thinks, or with his heart. So if you have something like a burning problem that you want to solve, and you're doing it anyway, despite your parents telling you that you should get a job and your friend and etc., then welcome. You're an entrepreneur.
Very nice. What's the next hottest thing after DeFi?
Oh God.
What you get paid?
I'm not gonna say, because I don't want you guys to front run me in the market. We actually have a venture partner at Collider that actually think that DAO will be the next big thing, because every token network is basically some sort of DAO at this point, basically trying to incentivize their network. We don't quite agree yet. I mean, I do believe that DAO as a concept is interesting, and I think we're going to see a lot of different governance in the future. And I am hoping that 10 years from now, a lot of those companies out there will be, will not be like one company with one small board and some shareholder, but actually, will share their governance with a larger stakeholder audience. But yeah, I think that the DAO as a technology is not super interesting yet, because blockchain and crypto is not big or mainstream yet. Maybe in the future. So yeah. I mean, I'm not sure, to be honest. I mean, we're looking at a lot of different things. We're looking at privacy. We're looking at, for example, we're looking at insurance and DAO insurance in the space. Especially. We have an investment that we were really proud of. It's called Nexus Mutual, and they're basically, they're basically creating a pool of a capital pool that cover some of the DeFi. So there's about $2.5 billion locked in DeFi right now. Last I checked, maybe it's higher right now, and and all of that money is not covered by any contract. So basically, if there's any smart contract hacks or someone stole your money, steal your money, you're basically losing everything. And Nexus Mutual allow you to cover that, but the money is coming from the user itself. So it's really interesting. And in a way, it's some sort of DAO as well, because all the governance is basically based on users who are investing into the capital pool.
Awesome. Next question: when will the DeFi bubble burst?
You haven't heard? Yesterday. That was like a couple of hours ago. I have no idea. Yeah. I don't know. If I knew, I'd be rich. I think there's a lot of interesting thing happening in DeFi, and there's other things that are just too speculative and kind of remind me of 2017. But I think the pattern or the idea itself is really interesting. And then we have company like Nexus Mutual and a bunch of other company who are doing extremely great thing. I think Sam Bankman from FTX, if you guys know him, so try to search for his Twitter post. He basically gave a story about two different exchanges. One called Fcoin and the other one was BitMax, and both of them was doing some sort of trans mining. And they were basically incentivizing fake volume, right? Some sort of, you could say some sort of DeFi, because DeFi is all about, total value locked up and transaction that don't really create any fees. And so there's no fee structure. And so basically when there's no revenue, there's a bubble, because you have to rely on speculative token price. And then the story goes that Fcoin basically at some point burst, and I don't know if they're around or not. And then BitMax kind of ditched the trans mining, and then they became super serious about the business, and they did other things, and now they're much more successful, and they're basically doing a lot of things. So what I'm saying is that the bubble may burst, and it bursted out in 2017, but the attention and the awareness that comes with it and the money that comes with it is usually very positive, because it brings a lot of attention and a lot of people get excited and they build stuff, and then when it bursts, there's usually more people staying in the ecosystem than it was before. So that's the only when I kind of look in a 10-year period, if the graph goes like that, and then there's a roller coaster, that's completely fine. And we'll see. And the thing is that we're going to see a next market cycle usually in probably 2 to 3 years, based on something else, and we're going to see the same excitement, exuberance. The only question is, are we in the beginning of the DeFi or the end of it? I have no idea. I mean, I wish I knew.
Awesome.
Maybe Damir have an idea. Maybe we should ask him.
So that's a different AMA. I have to get his views all day. On to the next question. So after ICOs, now DAOs, what's the next fundraising innovation to come?
people to buy your token from there. So we see a lot of different way to raise money today. I think most of them are not that innovative because they are built upon previous round, which is the ICO and the IEO. I'm still not sure if we're going to see a new innovative way, but bonding curve is super interesting because they also kind of tie the price to actual demand, and they don't create that that crazy demand that could actually skyrocket the price, because all the price that we've seen in 2017 were linked to the fact that people were buying those tokens from from exchanges, and they were just setting their own the price discovery was kind of completely fucked up. And today we see better price discovery through bonding curve and through the different mechanism of fundraising.
Awesome. What is one piece of advice you've received which shaped how you work?
That's a really hard question. I mean, I think it was during my Liner time. Actually, building something that people want, and the best way to find out if people want something is to sell it. And I remember we had a couple of ideas. We wanted to do a product, and I remember that we kind of were fed up, building product for like a month or 2 months, and then launch them, and then find out that there's no one out there that wants to use those products. So we said, okay, what is the best MVP? The best MVP is actually building a landing page. And so we built a landing page, designed the product that was not there. And then we put like three different landing pages on Encode, like a few days after a few days. The first one flopped, the second one flopped, and then the third one was actually met with a lot of enthusiasm, and then people actually went through the whole process and then left their credit card. And so I think at that point we were like, wait a second, we just spent like a couple of hours building something that don't exist, but we get really good and strong feedback of people actually wanting to prepay for that idea. So I guess it's a very it's not innovative, it's not new, it's pretty obvious, but you need to remind yourself that you need to build something that people want to actually pay for. I mean, you need to build something that people want, and today people want the only way to find out what people want is to ask them for money, or see how they're using it, at least in the B2B space. That's how it works.
Awesome. Question from Mike. Do you invest in tokens of a project? If so, what type of token structures and share of token supply are appealing for VCs?
We invest in all shapes. So we invest in convertible note. We invest in token directly in equity. We believe that everything is fair play. What we're looking to invest in is we're basically looking to invest. When we're looking to invest in token, we're looking to invest in a fair structure where basically the price or the number of token you're getting is kind of linked to the progress of the project. I've seen a few projects we sold at a certain price, and then a few months later, kind of 10x their valuation, whatever, and then other investor came in, whatever. So the company we're investing in, we try to make sure that everything is, the whole thing is fair, that if there's any vesting, then the vesting is kind of the same vesting for everyone. Usually we require that the founder have about 4 years of vesting, and usually from the point of when they actually launched the token and not when they started the company. So we're basically trying to bring a lot of what, all the knowledge we've accumulating in the traditional market and try to bring it to the token market. I know that sometimes it doesn't work like that, but what we really want to make sure is that investor, retail investor, and founder are all aligned and all share the same incentive. As soon as there's some sort of misalignment, and it happens all the time, because you have hedge funds investing in the space, you have VC investing in the space, and VC and hedge fund are very different. The VC don't care about liquidity, and then hedge fund do care about liquidity. The moment there's misalignment between your investor and they're getting different term, it's a very broad problem, and you're not going to be able to build a community. At some point, there's going to be a mistake made, and that will alienate your community. So put your community first, and then your investor after that, and then yourself.
Awesome. To the last few questions, I'm conscious of time. What do you look for in founders when you're investing?
Oh, I have one word: integrity. Especially in this market. I mean, I want obviously I want smart, and I want empathic founders and all the things that usually investors are looking for. But the one thing that's really that I'm really looking for in the crypto space, because it's very hard to design a company with a token that is fair to everyone, and building a community takes time. I'm really looking for integrity and transparency, and also founder who are very communicative. It's a different game than building a company. If we think about company, we basically talk about product market fit. In the crypto space, I like to call it community market fit. So basically, sometimes the product is the community itself, and so you need to spend a lot of time building a community around your product, and people like to follow you when you're transparent, when you have integrity, where you have good ethics, and especially when you're very communicative. So always over communicate. All those quality and those traits, when I see them in the founder, I'm more likely to be open and talk to him and understand. But if they don't have that, it doesn't matter how good they are or how many exits they had in the past. I would never invest in someone who doesn't have any integrity. So for me, it's a showstopper.
Fair enough. Out of interest, what is the best hackathon project you've ever seen, if you can remember a particularly good one? It's a tough question.
It's a tough question because I don't spend enough time in hackathon. Damir, you should be inviting me to this hackathon, but I don't spend enough time in hackathon, and so I probably see those because we're early stage, but not too early stage, and we're actually changing that by setting up a Collider Labs, which is basically an incubator, and so we're going to be able to invest in people who are building product at hackathon and want to take it to the next stage, but providing them the first check. But I'm not spending enough time. I'll be honest, I'm not spending enough time in hackathon, and so I usually see all those products that probably were birthed at at a hackathon, but I don't know that. I'm seeing a fledged product, good well-fledged product, and I don't know they were originating from a hackathon. So I'm sorry.
No problem. Let's finish with this better question. What's your best investment? What's your worst? And let's keep it crypto related to be fun.
My worst investment is probably that's a good question. You know what? I'm not going to say what's my worst investment because I still hold that investment and I still have hope for it, and so we're a VC, and so as a VC we kind of we tend to not sell. We're not a hedge fund. We don't flip back and forth, and so we're still discussing with the founder and everything. And so I'm not going to say it was my worst investment. Maybe in 10 years you can ask me that, and I might tell you. My best investment, that's a really tough question because we have a couple of good investments right now. It's very hard to know right now. We've been around for like a year and a half, and it takes about 4 or 5 years to really see good companies. So I would say Nexus Mutual is a really good product, a really good community. I like the fact that they are making changes that actually optimize for the longer run, even if it means that the price of the token goes down. So I like the fact that the founder is putting the product itself and product market fit forward. Zengo is another one. It's an amazing wallet that have a really good user experience. I'm using it on a daily basis, and I really trust that wallet to hold my crypto. And yeah, I mean, there's probably a couple of other, but I'll just stop here.
Awesome.
It's like asking you, it's like asking your mom, who's their favorite children. It's like, it's very hard.
They always have a favorite. They just can't say.
Yeah.
Awesome. Well, it's been an absolute pleasure, Adam. Thank you so much for your insight, for your time. And I know the students really, really appreciate it. And the answers were absolutely fantastic. So thank you.
Thank you. No, it's my pleasure. It's my pleasure, really.
Awesome. To all the students, we will see you. Keep hacking hard. We'll put the transcript for this event and the YouTube for it up on Discord, on the usual channels on Medium. But again, Adam, thank you very much, and enjoy the rest of your day.
And one last thing, if you could share my email with your student and tell them that they can reach out to me whenever they want.
Oh, that's incredibly.
With question, whatever. I mean, I remember when I was a student and when I got started, I think it's super important to be able to mentor and help, new entrepreneur, breaking into this space. So if there's anyone who want to reach out and ask me questions about anything, I'm more than happy to respond.
Awesome. That's incredibly kind of you. I'm sure a number will be. You're going to be wishing you never said that now. Awesome.
It's okay. I have GPT, so that bot can answer for me.
Yes, absolutely. Maybe this is GPT-3 right now. Awesome. Well, thank you all, guys, and enjoy the rest of your days. Enjoy the sunshine. Thanks all. Bye.